This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 16th, 2021. Our question this week is, what is the SEC? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 1.09% on Friday and was up 1.58% for the week. The S&P 500 increased 0.75% on Friday and was up 1.82% for the week. The Nasdaq increased 0.5% on Friday and was up 2.18% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the major indexes. On Monday and Tuesday, all 3 major indexes finished down. On Thursday and Friday, they all finished up. On Wednesday, the Dow Jones Industrial Average finished slightly down. It was actually flat, while the S&P 500 and the Nasdaq finished up. The new unemployment claims were 293,000 versus 318,000 expected. A record 4.3 million Americans quit their jobs in the month of August. The weekly mortgage demand stalled as the 30-year fixed rate mortgage increased to an average of 3.18%. Consumer prices rose in September to a year-over-year gain of 5.4%. Treasury yields gained after retail sales increased in September. The U.S. House of Representatives approved an increase to the debt ceiling, and the SEC may allow Bitcoin future ETFs to begin trading on Monday. New unemployment claims, the number of workers quitting their jobs, the weekly mortgage demand and rate, consumer price increases, the U.S. Treasury yields, Congress passing an increase to the debt ceiling, and the SEC potentially allowing Bitcoin futures ETF trading are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the SEC? The SEC is the Securities Exchange Commission. The Commission is an independent government agency created in 1934 to monitor and regulate the U.S. stock market. The SEC informs and protects investors, help companies formulate capital, that is, go public. They enforce the federal security laws, they regulate security markets, and they provide financial data on corporations. Specifically, the SEC regulates insider trading and fraud, the filing of financial information, monitor insider trades, regulate investment investors, the securities market. They also create the rules of exchanges, brokers, dealers, and mutual funds. The SEC are expected to approve Bitcoin futures ETFs soon. Do you deal with the SEC? Well, if you own stocks, you are protected by the SEC. Do you know that they regulate the stock market? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read. but society and the powers that be discourages you from reading, especially books. Schools taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I trade and take what the market gives me, whether it's going up or down or even sideways. How do I do that? I apply the Southside strategy. Here is my trading watch list from the week ending October 16th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week and for the 3rd week in a row was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the 2nd column. It increased 5.57% on Friday, and it was up 11.97% for the week. Grayscale is an investment vehicle like an ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safeguarding Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased just over 48% year to date. I own Grayscale shares. I do not generate cash flow from Grayscale because they do not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the 3rd column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 12.13% versus 19.25% for SPY, a difference of 7.12%. The Southside is losing to SPY by just over 7%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit this year during the late spring and summer months. However, Bitcoin has outperformed the market for the past 3 weeks. Will the comeback continue? We'll see. The portfolio is 77.21% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 21.46% of the portfolio. Cash is 1.27%. The cash flow generated for this week was 0.38% of the portfolio account value. The account value changed by 8.65%. Meanwhile, the S&P 500 ETF SPY changed by 1.83%. I sold option contracts on 2 positions this week. They were both calls. That ranged from $213.44 to $254.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for questions of the week. These questions and videos are listed in the description section. And please like, share, subscribe.